Hi everybody, welcome back to Pure Technicals. This is Sam Broy. Today we're going to be looking at price action, more specifically pin bars and doji setups. So following on from our lesson on support and resistance, I've plotted a few lines here on the Euro-US dollar daily chart, some of the most significant levels of support and resistance. If you zoom in, you start to see some patterns that come off of support and resistance. For example, here, and another one here, another one here. Now, these are known as pin bars. They're basically a move up or a move down and a rejection of a level of support or resistance. Now, these rejections give a very good idea on whereabouts the market's going to move next. Where we see a move up along with a rejection and a move back down of a level like this psychological level here, 1.30, it's a pretty clear sign that the market is rejecting the price and wants to look to move down, which it does. I'll just try and find some larger examples. Try and make this a little more simple. Here we go. Big pin bar reversal there. Two pin bars here. It's also an inside bar setup as well. We'll run through that another time. As you can see, they're happening all the time, and usually when they do, the direction they suggest usually is the direction that actually takes place. For example, you've got another one here, another one here. So they're not an uncommon thing. One very important thing to remember is, as stated previously in the support and resistance lesson, you want to be looking at the 4-hour and the daily charts. When you get pin bars and inside bars and things like that on the smaller time frame charts, they're nowhere near as accurate as they are on the daily or the 4-hour charts. In fact, I know of plenty of people that trade purely off of the 1-day chart and purely off the 3 price action setups, nothing else, no indicators, nothing else. So in itself, this could in fact be your strategy of choice. Now, before I move into speaking about how we actually trade these pin bars, just want you to notice one thing. There are pin bars like these two here. They're both facing up, they both suggest a strong up move, but the reason they don't pull off is because if you look, they're right up against a strong area of resistance. When you trade these, you want it to be a nice sort of a nice clear space below or above them, depending on the direction of the pin bar. You don't want to be trading one if it's right against support or resistance. Right, so let's take a look into how these pin bars are traded, the safest way to trade them. I'll just get rid of the support resistance. Okay, we'll go for these two here. We have this very strong move up. I do believe it was a news day. 2 pin bars that came back down and found support here, basically at 1.30 psychological level, like we spoke about in the previous video. So you have 2 strong pin bars in an up move, rejecting support, facing upwards. This is a very strong indication that the trend is in fact going to keep moving up. So with that said, the way we trade them is we wait for a break above the high of this pin bar. The high was there, 1.30993. We'll wait for a break above there. So here, when the market moved above that pin bar, would be when we're looking to buy. So you would buy on a break above that high. Your stop loss will be placed directly below, around this sort of level. at the very low of the pin bar. As for profit targets, you can seek next resistance, which here would have been around this sort of level, which it reached within 3 or 4 days by the looks of it, 5 days altogether, and you would have hit your profit target. If you wanted to hold it for a bit longer, you could wait to see how the market reacts when it hits this next resistance, and if it goes through, you could hold the position to this level. With longer term trades, you need to sort of move with the times, so you need to sort of see how the market reacts when it hits a level around your profit target, and if it's still looking strong and still looking like it could break through it, then there's a possibility it will, and you could increase your profit target. There's a way to do this without actually risking any money. Once you have entered the trade here, your stop loss, as we explained earlier, is below the low of the pin bar. Once the price breaks up, it finds new support here, so now you can move your stop loss from here up. So now your stop loss is actually at break even, so if everything goes the worst possible way, you can't lose any money. This is obviously a fantastic position to be in. If you've ever traded before, then you'll know how big a part psychology can play in your trading. If you have a stop loss that's at break even and there is no possible way that you can lose any money, that psychology that could make you enter or exit or do something silly with your trade, the psychology's gone. There's no money at risk, there's nothing to worry about. And you can do even more to delete this psychology. If you see in this trade, obviously would have been a fantastic trade. Once it moves up, if you did in fact move your stop loss to break even and you didn't worry about it retracing and coming back to hit, you stayed in the trade and it broke through. After it broke through, you could now move your stop loss from here at break even to up here, which would now be 67 points in profit. So again, even if everything went the worst possible way, you'd still earn 67 points. And depending on your lot size, this could be a considerable amount of money. Now, obviously there are ways to battle psychology, but why battle it when you can just delete it completely by trading in this way? There'll be a risk management strategy I'll talk about later on. It's called pyramiding. We'll run through that at a later time. I'm sure you'll find it very interesting. So just to clarify once more, have a quick run through again before we finish this video. A bullish pin bar, you're looking for a long tail downwards and the full body at the top of the pin bar, above the halfway level of the entire move. As long as the full body closes above the halfway, it could be considered a pin bar. For example, these two here, as mentioned, this one here, and this one here. One more thing to suggest: you should probably stick to trading pin bars that face in the direction of the current trend rather than trying to guess a reversal pin bar, because guessing a reversal is normally the worst thing to do. You normally have to wait for confirmation. And most people in the beginning, they don't. They see a pin bar, they assume the market's going to reverse and they sell off. They hold the position for as long as possible and eventually it goes against them. However, if you trade with the trend, you always have a much higher chance of coming out profitable, coming out with a decent sized profit. Here you don't actually see a pin bar reversal showing that the market is actually going to turn, but there is one other thing that does suggest it, but we'll go through that in a couple of lessons time. For now, that just about wraps up this lesson on pin bars. Again, I hope it's helped everybody, and I look forward to seeing you all next time at Inside Bars and Engulfing Bars.